Welcome, everybody. Hope everyone's having an amazing week. Very excited to be speaking with you all about the Corporate Transparency Act today. This is a topic that is either top of mind or will be top of mind over the course of the rest of the year as it relates to business compliance and running a business in the United States. So just to jump right in, I thought it would be helpful as we start to unpack the nuances and intricacies of the CTA. I thought it would be helpful just to understand why this law was created. As many of you may be aware, money laundering is a major problem in the United States. It's one that costs our nation trillions of dollars a year. Money laundered many times is used to support criminal and illicit activities, which the government is focused on preventing by elevating the reporting standards within our country with the passing of the Corporate Transparency Act. So the fight begins. The Financial Crimes Enforcement Network is the department of the U.S. Treasury that many business owners likely have never heard of unless they have a foreign bank account, perhaps, or work in the financial services industry. FinCEN was created in the late 90s to safeguard the financial system from illicit use, combat money laundering, and promote national security. And really, until now, FinCEN has been focused on transparency within banking and real estate, though given the prevalence of financial crime, unfortunately, and the illicit activity within the United States, the agency is now expanding its scope to incorporate small businesses within our nation. Interestingly enough, the U.S. has become a haven for financial criminals as a result of the federal government really never requiring beneficial ownership information of private companies to report. It's never been a law. It's never been required in our nation before, which is really unlike many other major economies throughout the world that do require this level of information disclosure to start or form a private business. Thus, over time, criminals have unfortunately gravitated to the United States and are using shell companies to shield assets and avoid taxes. And this new law was passed to help prevent that. So in 2021, the corporate transparency was passed without much attention from business owners or their advisors, for that matter, as our nation was rightfully consumed with the COVID pandemic and PPP and ERC. The law was enacted really to mitigate this illicit activity and require beneficial owners of reporting companies to disclose their personal identifying information with the federal government on what's called a BOI report, or a beneficial ownership information report. Ultimately, FinCEN will create a database that will be accessed by government agencies and select financial institutions that will offer a new layer of transparency within private businesses and their ownership landscape. As of January 1st, FinCEN is now accepting BOI reports on behalf of businesses that have until the end of this year to file their BOI report if they were a business formed prior to 2024. However, only 90 days to file a BOI report from your formation date if you did form your business in 2024. That being said, the government has done very little to help our nation's population of business owners become aware of this new law, and it requires quite a bit of compliance. And also, it's important to acknowledge that if compliance is not met, there are significant penalties that the government will levy if filing deadlines are missed or inaccuracies in the BOI reports exist. In fact, FinCEN has only 18,000 followers across all of their social media platforms. So despite a few efforts on their part to create some awareness around this new law, the agency, as mentioned, just simply isn't well followed amongst the business community, and thus very, very little awareness has been created. So it's important to acknowledge just the impact that this law will have across the business communities in the United States. The breadth is quite significant, and many businesses will be impacted. It's estimated by FinCEN that 32.6 million businesses will be reporting companies in the U.S. who must comply with the Corporate Transparency Act by year end, which is really just in the next 7 months or so. We believe that's actually a drastically understated number after unpacking the methodology that they use to get to that number. We believe it's more in the corridor of about 40 million businesses, but it's still a huge amount of businesses that will need to file a BOI report this year. As such, FileForms anticipated the need to help the government spread awareness and provide technology solutions to facilitate peace of mind and education for this new requirement. And our team is made up of accountants and lawyers, along with financial professionals who have been examining this new law and building educational resources and technology tools to help make compliance simple and secure for the millions of businesses that ultimately will need to file by the end of the year. So January 2024, as I mentioned, January 1st of this year is when FinCEN began accepting BOI reports through their government portal. New businesses formed after January 1st of 2024 have just 90 days to file their BOI report. That means businesses that were formed January 1st or within January of this year perhaps have missed their deadline and potentially could have started to accrue fines. The fines are very significant for missing a filing. It's $591 per day, up to $10,000, and then subsequent penalties thereafter. So certainly significant penalties. These are really the first enforceable BOI deadlines and penalties that are coming to a head just in the last few weeks and subsequent days to come. So if you did form your business prior to January 1st, 2024, you certainly should not wait until the end of the year. There will likely be some preparation required to file the BOI report, and getting the report out of the way prior to the holidays is super important. These are requirements that are really just for the initial report to be filed. However, the Corporate Transparency Act is a continuous reporting requirement, as owners must keep their information up to date with the government, as changes inevitably will occur. Thus, upon any change of information that will occur, and we'll touch on it later in the presentation, but these changes must be reported within 30 days. So it's just important to realize that there's an initial report and deadline, and then subsequently that the information needs to be maintained almost every 30 days so that it's fresh and reported with the government as to not potentially risk a fine. So BOI reporting, what exactly is reported? What actually is on the BOI report itself? The report includes quite a few different fields, including legal name, DBA, address of the business, in addition to the EIN. Furthermore, information on the beneficial owners includes first name, last name, date of birth, the residential address of the beneficial owner, and then also a copy of the photo ID of the beneficial owners. So this is something that's relatively new. Typically, businesses do not have to disclose their photo ID to form a business or to report taxes, but the BOI report is requiring that. And it's also important to note that company applicants, which is a defined term that we'll dig deeper into, will be reporting the exact same thing as the beneficial owners are required to report. So this just helps kind of lay out what type of information exists on a BOI report, and then ultimately we'll dive in on who must report. So before we do that, let's discuss what is a reporting company. So a reporting company, there's really two types. There's a domestic reporting company and then a foreign reporting company. And these can be really any types of businesses. So that includes corporations, LLCs, partnerships of types. It's really any business that's registered with the Secretary of State to do business within the U.S. That being said, it's also worth mentioning that there are 23 extremely specific exemptions that we'll cover shortly. But as Randy mentioned, 98% of all private businesses throughout the U.S. will be needing to file a BOI report. So despite the fact that 23 exemptions feels like a decent amount, they are extremely specific, and it's really built around the fact that those businesses are already reporting with the government in some regard. But to just jump into the different types of beneficial owners. So once a business determines that they are a reporting company. Who of the business needs to report? Well, once again, there's two types of beneficial owners. One is quantitative, the other is a little bit more ambiguous. We'll start with the ambiguous one first. Individuals that exercise substantial control or decision-making power over the company will be defined per FinCEN as a beneficial owner. And if you're listening and you're like, wow, that's quite vague, it is quite vague. And we have a good amount of content on our website that we can follow up with after the discussion to help unpack that further and provide examples. But that includes folks such as C-suite executives, board members, decision makers at the business. Or the second type is any owner that directly or indirectly owns 25% or more interest in the business itself. So that's a little bit easier to understand given the nature of that 25% threshold. Now, we mentioned company applicants as well in the previous slide. I just thought it would be helpful to just kind of define what exactly a company applicant is. It's worth noting before we jump into the definition that a company applicant only applies to businesses that were formed on or after January 1st, 2024 and beyond. So if you are a business that was formed prior to January 1st, 2024, you do not have to report your company applicant. You just have to report your reporting company information and your beneficial ownership information. So there's a key distinction there that's worth taking note of. However, a company applicant is an individual or organization in charge of directly registering the business or forming the business with the Secretary of State initially and is responsible for controlling that process. So a company applicant can be an individual. It could be a beneficial owner if a beneficial owner is filing their paperwork with the Secretary of State on their own. But more than likely, it's a corporate services firm, attorney, or CPA who's typically staffed with forming the business. So as you think about forming businesses, going forward, given this law is now in effect, it's important to take note of your company applicant and even ask your company applicant if they can provide their FinCEN identifier, which is a unique code that many company applicants that are organizations will have and can provide you, which will save them from having to report their IDs and such. It's a unique code that FinCEN accepts for folks who are filing volume of company applicant files. So beneficial owners, we mentioned there's some exemptions of who needs to report BOI. So it's worth noting that despite, the 23 exemptions that we'll go over, really kind of in more summary here, that these only apply to about 3% of all the private businesses in the U.S. and the balance, the lion's share of the business in the U.S. are going to be reporting companies. So just to kind of further detail what type of exemptions exist, I like to break it down into a few different buckets as seen on the screen here. Starting with the top one, banks, utility companies, insurance companies, highly regulated companies that are already disclosing information with a federal agency, those businesses are exempt. The government has a good understanding of who owns and operates those businesses. Thus, they do not need to file a BOI report. The second group here is large investment companies, those that are regulated by the SEC, for example, private invested vehicles, venture capital funds, businesses of that nature. Once again, highly regulated, managing, hundreds, if not millions of dollars worth, hundreds of millions, if not billions of dollars worth of assets. Those businesses are already reporting with the government in some regard, thus do not have to file a BOI report. Furthermore, tax-exempt entities such as 501(c)(3)s, nonprofits, in order to get tax exemption, there's a good amount of holes and loops that folks will have to jump through in order to meet those benefits. So thus, they do not have to file a BOI report. This next one is certainly worth noting. I think the companies on this call can determine pretty easily whether they are defined as a large operating business or not. But there is an exemption around large operating companies. So if you have 20 full-time employees, 5 million or more of revenue, and an operating presence in the United States. As you could tell, there were three things I mentioned there: 20 employees, 5 million of revenue, and an operating presence in the US. If all three are met, then you would be deemed a large company and would be exempt from reporting. All three must be met, though I emphasize that. If only two are met, you will still have to report a BOI report. But there is an exemption depending on the size of your business. Most businesses in the United States do not meet those thresholds, all three of them for that matter. And then subsidiaries of certain exempt entities will also get an exemption. It's important to note that these need to be wholly owned subsidiaries, such as a tax-exempt entity owning a subsidiary. That would be an exempt entity, for an example. And then inactive entities, this one is another quite detailed exemption. There's actually 6 parameters that need to all be met in order to qualify this. FinCEN made it this way so that folks do not just go start dissolving entities as a result of the Corporate Transparency Act. However, that will also be in the follow-up material that we provide. So those are kind of the high-level overview of the exemptions and who potentially will be not liable for reporting a BOI report this year. So thought it would be helpful just to determine kind of when to refile. As we mentioned, this is a continuous reporting requirement. So we've really discussed the initial filing requirement thus far in the presentation, though it's worth noting this is a continuous reporting requirement. So given information changes must be reported within 30 days to FinCEN, it's helpful to have a system in place to ultimately determine when these changes happen, and then ultimately re-reporting that information with FinCEN, reporting the update. So a few kind of catalysts for a change, or the changes that FinCEN is looking to kind of get an updated report on. This can include any information on the BOI report itself. So that initial BOI report, if there's a change of information that does result, this will be requiring a change of information filing. So such events can include the changing of a business or a residence address, a BO if they move homes. If a business moves an address, that ultimately will require a refiling. Change in the business's name or a beneficial owner's name. This could happen from a transaction, a business rebrands. This could happen from a business owner getting married or divorced. A variety of rebranding could unfold. So if there is a change of information, such as a name, that would also be a catalyst for refiling. Change of beneficial ownership and the group that makes up that BOI group. Those folks can be coming in and out of the business regularly. I mentioned C-suite executives. Folks can be hired, they can be let go. Boards can change, managers can change. Investors can come into the business, people can leave, people pass away, unfortunately. So there's a variety of changes that can happen in that realm. Would also be a need to re-report. And then, inevitably, we all know our IDs will change. There's obviously some states where, your unique ID number won't actually change when you get a new ID. Some states do. So FileForms actually helps you track that, and ultimately we'll send you reminders to evaluate all these changes. So quite a few reasons to have a system in place to help make all of this tracking a little bit easier, whether you're using a piece of technology or an internal process. So I thought it'd be helpful just to kind of take a step back and really just kind of understand how BOI reporting has unfolded thus far since going into effect. So, we're learning that, many businesses still are unaware of this, and ultimately are going to need to, become aware, obviously, before filing by the end of the year. So if you think 33 million businesses will file, which is FinCEN's guidance, only about 1.2 million of them have filed so far. So despite more than 30% of the year passing already, only about 3% of folks have actually filed so far. So quite a bit of backlog of folks who either are unaware of this new law, or potentially procrastinating because they feel like they want to wait later into the year to file this information. We believe tax season, a lot of folks wanted to get their taxes out of the way, and are certainly seeing a big uptick in filing since December 15th deadline for taxes. But given this staggering statistic that, there's still pretty much 33 million businesses out there that still likely need to file, it's pretty evident that folks will need to, consult people like FileForms consult their business advisors, their legal professional, or their accountants to ultimately get prepared and help spread awareness for this new law, because this is certainly something that folks will not want to wait till the end of the year to do, because this is the first time it's ever been reported on. There will be hiccups. People will have expired IDs. Business owners won't be able to track down date of births of their C-suite executives over the holidays and people traveling. So between summer and the holidays, there's really not that much work time left, depending on the types of vacations people take. So we believe we want to help as many people as file sooner rather than later, so that there's kind of compliance and no chaotic rush at the end of the year around the holidays to get this stuff done. So I mentioned throughout the presentation that there's a FinCEN portal where the government accepts information and the BOI reports are filed. This is actually a free option that owners can submit their reports directly to FinCEN. The filing on the government portal is expected to take 2 to 3 hours end to end, and can really require business owners to read quite a bit of information, which is kind of static, stale, boring legal jargon. Most of the content that the government has put out has been long form, 93 plus pages of guidance to ultimately determine if you need to file or not. We've surveyed quite a few folks who have come to us after struggling on the FinCEN portal, or even folks that had filed on the FinCEN portal directly. And a lot of folks walk away feeling quite confused, given this is all new and somewhat complex. There's exemptions, there's specific information, there's these arbitrary terms that are getting thrown around. So FinCEN really hasn't done much to educate on this law overall. Thus the portal does not have really much guidance or education built into it to guide the user through the requirements. So for this reason, errors are quite likely, and folks might even do it correctly and then ultimately not feel certain that they did it correctly. So there's really no ability to store the information in the portal either. So this portal was built simply to take the information, kind of a snapshot, and the user is really on the hook for storing the information on their own. As we mentioned, this is sensitive information. This day and age, there's a lot of cyber liability out there. There's identity theft. So putting the onus on business owners to store, in some cases, multiple individuals' personal information just isn't necessarily what businesses are built for this day and age. So having a secure system in place can certainly fill a void there. And I just want to emphasize there's just limited to no support in filing with FinCEN. They offer an AI chatbot that quite frankly is only so useful. And then subsequently, when you call into FinCEN, they have a support line. You most certainly will get a answering machine and likely never receive a call back. We've tried this weekly and have yet to get a call back. So it's important to have a system in place and perhaps even some support in filing your BOI report and then perpetually maintaining the data. So really in hopes of taking this compliance headache away and providing a simple and secure solution to provide peace of mind, Alignable's partnered with FileForms to make BOI reporting a breeze. And we've become official partners to effectively provide that system to help business communities serve their members, not only with a solution to file, but with the educational content and do-it-yourself technology, so that we can get these reports filed for business owners in just 10 minutes. So we're saving business owners hours of time and providing peace of mind through using our technology and our guided solution. Our revolutionary technology provides secure ID aggregation. So collecting those IDs, you can rest assured that you're not obligated to send them via text or email where they could potentially be compromised. We're storing all the sensitive information with AWS, and it's encrypted both in flight and at rest. So the information is getting where it needs to go securely. And furthermore, we are a government-approved vendor with direct integration to FinCEN's database, so that we're able to push the information that we collect securely to FinCEN We were actually one of the first to receive that benefit from the government and that acknowledgement, which we're very, very proud of. And then lastly, as we mentioned, this is a continuous reporting requirement. So our technology saves you the hassle of having to track all this information on your own and sends reminders. It tracks the ID expiration and ultimately makes filing much, much easier. Our users, and we'll cover this more in a live demo shortly, but our users have access to a dashboard where owners can easily upload their company information, their owner's information. They can use bulk uploads to file multiple entities and multiple BOI reports at once. You can use beneficial ownership information across entities, which is a huge time saver and mitigates a ton of errors that might be the result of using the manual FinCEN process. Owners can securely upload their IDs as well. There's a bunch of features and data validation built in so that you're not putting in a zip code as an EIN, for example. There's tooltips next to every single defined term. And then very importantly, we have a human live chat bot as opposed to many of these AI chatbots out there to answer questions that perhaps come about after filing your report or during the filing process. So you're actually able to speak to a live human throughout the process and get these reports filed correctly and ultimately save a bunch of time. So we provide a very high value experience. And ultimately, for fines of up to $10,000 a day, we feel like the small price that we charge for our services and plus a discount that you get for joining this event and being a member of Alignable is a very small payment for the services that we're providing, ultimately saving you all tens of thousands of dollars worth of fines, depending on how many entities you have ownership stake in.